Nicholas Bornois of Capital Link. I would like to welcome you to Capital Link's Trending News podcast series. We have the opportunity today to have with us Carlos Balestra de Mottola. He is the Chief Financial Officer of D'Amico International Shipping, a major product tanker company listed on the Milan Stock Exchange. And D'Amico International Shipping released their earnings, their Q1 earnings in a few days before. So our podcast is particularly timely to talk about the product tanker market and D'Amico. Carlos, welcome. Let me start our discussion by asking you, the product tanker market is hot right now. It has shown strong performance. So what drives the market? Is it drivers related to sector fundamentals? Are drivers related to the Ukrainian crisis, or both?
Hi, Nicholas, and thank you. Yes, it is both. Undoubtedly, the war in Ukraine is having a big impact in the market. There's an ongoing reshuffling of trades, an increase in the average distances which vessels are sailing. Imports into Europe are coming from further away, from Asia and from the Middle East. This is supporting the market currently, but this is a recovery which is still lacking volumes. I mean, and the weakness in the VLCC market is a testament to that. And so as volumes increase during the year, as there's going to be a ramp up in production from OPEC, there's going to be more oil coming out from the US, from Canada, from Guyana, and from Brazil, an expected increase of 5.5 million barrels per day this year. That should be more than enough to compensate for lost Russian exports and for the increase in demand, which despite the high oil price environment is still expected to be healthy this year.
Perfect. Now, in your presentation, you had a slide that was distinguishing between short-term and longer-term demand drivers, which I found very interesting. So can you elaborate on exactly the details of short-term versus long-term demand drivers?
Yeah, Nicholas, I mean, some of these points we already touched upon, but one key demand driver going forward short-term is the increase in jet fuel demand. We expect to see a very strong driving and traveling season this summer. We are seeing that the companies such as Booking.com and Airbnb are providing very strong guidance as to the bookings they are receiving for the upcoming holiday season, and that should definitely benefit our market. We're also seeing refining margins which are at record highs, and this should be driving stronger refining throughputs this year, with a very healthy increase in refined volumes of over 3 million barrels in 2022, with refined volumes ending the year at levels similar, around the same levels as in 2019. Of course, then we have also a very low order book, which is going to be supporting the market going forward. And then longer term, we also have the often mentioned change in the refining landscape, which was accelerated because of COVID, with a lot of the older refiners in the US, in Europe, Australia, New Zealand being closed, and the large majority of the refinery additions occurring in the Middle East and Asia.
You already took me to the next question that I wanted to ask you about the order book and environmental regulations and scrapping. So can you elaborate in a bit more detail on the order book, on scrapping, and on the impact of the new environmental regulations?
Yes, this is a very important factor which is going to be supporting the market for many years. The order book in the segments we operate in, so Handysize, MR, LR1s, is at 3.5% of the vessels on the water. So that is a historical low. This year, around 3 vessels have been ordered, so really almost nothing. The fleet is aging fast. 30% of the fleet in the segments we operate in is more than 15 years, has more than 15 years of age, and 6% is more than 20 years old. So there's a lot of potential for demolition. Vessels which are older than 15 years of age are also limited commercially on how they can be employed, and they are not the preferred choice and often not eligible for long-term charter business with the oil majors. So with the new regulations coming into force, these older vessels are going to be even more penalized. And they're, of course, also suffering a lot because of the high bunker prices and the higher fuel oil consumption. So given the very high steel prices we are seeing right now, there is a very big incentive for older vessels to be demolished. Of course, if markets are very strong, demolition might not be particularly high, and they might be postponed. But if demolitions in the segments we operate in were to remain at the levels seen in the last half of last year, we could actually already be seeing negative fleet growth in the second half of this year.
Excellent. So if I can bring into the puzzle, into the equilibrium, the sanctions, how do you think they can impact fleet supply, demand, especially? I mean, you mentioned during your earnings call that you voluntarily abstain from Russian cargoes. So how does this crisis affect product tanker shipping?
Well, the sanctions are having a big impact in the market, as I mentioned, because they have led to this increase in the average distances sailed. We as a company decided not to call Russian ports. It is possible that these sanctions might lead some older vessels which have been employed in trades out of Venezuela and Iran to also be employed in trades out of Russia. And therefore, that might slow down demolition of older vessels. We are seeing that VLCC demolition has been lagging behind, and this is one of the reasons, because a lot of these vessels have been employed in trades, in sanctioned trades.
Very interesting. So let's talk a little bit about D'Amico International Shipping on Q1. It's already behind us, but your performance has been improved. But are there any particular highlights you would like to mention in terms of major developments during the quarter?
No, Q1 was still a transition quarter for us. Excluding non-recurring items, our loss was of 4.2 million. But more importantly, in March already, we were substantially at break even. The loss is really the result of a very weak February, which was negatively affected by the surge in Omicron cases and resulting restrictions to the movement of people in Europe and in the US.
So looking ahead now, what are the cornerstones of your strategy in terms of fleet expansion? I know that you have a number of purchase options on vessels, strategy in terms of chartering and capital allocation. So if you can mention, if we can focus on each point.
Yes, Nicholas. We currently have only planned investments associated with the maintenance of our vessels. As you know, new building prices have risen significantly over the last year, and we are therefore unlikely to order new product tankers soon, unless if linked to a very long-term contract at a very attractive rate, and also, of course, with a very sound counterparty. So our plan is first to deleverage and bring our net financial position to fleet market value ratio based on mid-cycle values to below 50%. We ended the first quarter this year at 58.5%. And we plan to deleverage also to the exercise of the purchase options on the vessels we are currently leasing, allowing us also to reduce our overall cost of funding. But we do continue monitoring the market for attractive investment opportunities, and if these were to materialize, we are definitely going to be seizing them.
Thank you. Now let's conclude with a question on ESG and especially on your initiatives related to safety issues and the environment. I know that you have a big commitment in those areas.
Safety has always been and will continue being a top priority for us and for our clients. It is also thanks to our focus on this topic that we have access to long-term contracts with the most demanding oil majors. Although I would like to highlight in this respect that we are very glad that our fleet coverage falls over the coming quarters. We only have 25% coverage in the second half of 22 and only 6% in 2023. And we will therefore be able to fully benefit from the strong markets we anticipate in the coming quarters. Regarding the environment, we are working on several fronts to increase the efficiency of our vessels. We plan to install propeller boss cap fins on the few vessels we have, which are pre-phase 2 of EEDI. We are looking to install fuel injection valves on our vessels. We are applying low friction paint on all our vessels. We're looking at installing eco torque to reduce the fluctuations in engine power and lead to savings. And we also have tested biofuels on our vessels on our LR1s, which are all now certified to burn biofuels. The test went with a B30 blend went very well, and we are now planning to test also B40 and B50 blends on our vessels.
Thank you, Carlos. So that concludes our discussion. Thank you for being with us. We had the opportunity to discuss about the product tanker market and D'Amico International Shipping with Carlos Balestra de Mottola, who is the Chief Financial Officer of the company. So thank you very much for being with us.
Thank you, Nicholas.